Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 26th of June. All right, it's been a long, slow start to the week. We are slowly getting into the first of the major releases for the week, and that's the RBNZ interest rate decision and statement. Now, no change in rates expected. It's all going to come down to the statement. That's going to be where the currency is going to move. You've got to think they're going to be in line with the rest of the central banks and erring on the side of caution, global growth, domestic issues, these sorts of things. Any sway from that, then you might see actually the Kiwi go up. Now, let's just have a look at what we're dealing with at the moment. Today's market conditions now. If you have a look at the market conditions here, I've just updated the central bank sentiment to include both central banks. And obviously with the Fed dominating, you can see the overall central bank sentiment for the dollar pairs is down, right? Dollar Swiss, the CAD Swiss, Bank of Japan, all sort of neutral. So what we're seeing though is the sort of upcoming, so the market's factored in, I didn't realize it was so aggressive, but the market looks like it had factored in a 50-point basis cut from the Fed. Now, if you look at all the news pages here today, this is the stuff that you'll be sort of reading, and the Fed Chairman Powell has come out and said, no, that's not the case. So there may be a chance of a 0.25% cut soon, but that's it. They are sticking to the plan, and he's actually pushed back a bit on Trump, right? So that's very important to understand that the central bank is, just doing their job. So what we've got is a situation with that little bit of a spiel from the Fed chairman. We are starting to see the US dollar stall, but, the damage has already been done. On the major dollar pairs, it's already broken down through the hourly and daily trend lines for most pairs. And if you're looking at the CAD and dollar Swiss, it's also broken down on the weekly trend lines as well. So that down move is in, but the currencies are starting to drift sideways now. Okay, that the momentum is depleting, and that's where we're waiting for, or the market now waits for the next upcoming data release. If I give you a look at the charts here, you'll be able to see this very clearly. And I've left the trend lines exactly where they from yesterday. You can see here the Aussie, the Kiwi. I mean, the dollar yen has drifted lower, but you look at these other pairs, they're just drifting through trend lines. And actually, dollar CAD is just drifting sideways completely. So what we've got is a situation where that dollar weakness is factored into the market. Now everything's stalling. Okay, we know all the other central banks have already come out a little bit sort of dovish. So when you come back to look at the major pairs on the MyFX Trading Hub, when you've got the Fed and the other central banks all dovish, okay, that's going to be a situation where the overall policy is neutral, right? Because the Fed nullified the ECB, the Bank of England, the RBA, the RBNZ, and now we're left with sort of sideways moment or sentiment for the central banks on those pairs. And this is where we are, like short term. Yeah, these pairs have gone up, but their central banks have already come out previously and said, we've got major concerns here. But this is what we're left with. It's like a drifting market. Now, the key event today, obviously, is the RBNZ. Now, this gives the Kiwi a chance to sort of stand out from the crowd. And it's one thing that you should really be looking at. Now, volatility around this release will be extremely high because Kiwi liquidity is less than the other currencies. It's sort of not too dissimilar to dollar Swiss, really. The interesting thing here from the last 24 hours, on the hourly and the dailies, it's broken higher, right? So that's it's one of those things. It's now up high. It really comes down to what the central bank says. They have been dovish in the past. If they continue that dovish stance, well, then there's no change of the central bank sentiment. And I think we could still maintain the Kiwi moving higher. All right, it's going to be an interesting play. So if I just bring you back across to my charts, I'll just give you a look at the Kiwi here. Okay, so this is the Kiwi on a number of different time frames. You can see here where it broke through the hourly resistance. It's broken through here on the dailies as well. Like it's basically back in the middle of the range here on the weeklies. But these two charts moving higher give it a chance to keep going higher. So it's really important what the statement is. Now, the statement is probably going to be ambiguous, so don't sort of think you can be playing this with pending orders. But if you are looking for pairs to potentially trade, make sure you check out the Kiwi against a lot of these pairs. Now, Euro Kiwi's got a nice uptrend. Okay, now if they're, for some weird reason, the RBNZ was a little bit neutral to say hawkish, well, then you're going to get a great move down here on Euro Kiwi. It's already broken down here on Sterling Kiwi, but that'll keep going lower. You could get a break high here on Kiwi Swiss and obviously Kiwi CAD as well. Aussie Kiwi, bit of a dog's breakfast. I'd probably leave that one alone. And Kiwi Yen, well, it is slowly ticking to the top side. The chance of them being hawkish, I've got to say, it's probably zero, if anything, right? Realistically, there's so many global issues going on, and all the other central banks have mentioned it. So the real possibility is neutral to even a more dovish situation. So with that, you've got to think these current trends are going to hold, but you've got to sit back and wait for this to roll out. Sterling Kiwi, well, this is where Brexit really comes in and messes the whole trading situation up. And that's just, to me, it's more of a sterling move. Of course, Kiwi's rallied the last 100 points to catch up to where the euro was. Kiwi Swiss, well, we do have an entry level up here around 65.10. That's about 50 points higher. So slim pickings on the Kiwi crosses, but the real situation is going to be waiting for what the actual statement is from the RBNZ. And it's going to be a little bit convoluted, I would think. All right, so first major impacting release for the week. It's not going to be easy because, as I said, it's the statement that is the key part to it, but that's where your potential move is. Now, the rest of these pairs, they're still trading sideways, right? So they've got this dollar bearish tone, which is prominent across all the dollar pairs. Now, what we're looking to see is there any continuation of that move? If there isn't, right, if we don't see a continuation of that move, we may start to see, especially on the hourly charts, these other pairs starting to roll over and starting to drift lower. And this is what happens when you see momentum stalling. These start to drift lower, and on the hourlies, these ones start to retrace back to their break levels. And that's what I'm expecting over the next day or so, unless we get some new geopolitical issues coming out, right? So we're in the balance, and that's all we can do at this stage is just try and wait, try and pick these things off. Now, I like the fact that just coming back here to the charts just to finish up, I do like the look of euro, and it's sort of just drifting. See how it's drifting sideways back again like it's always done. It's through that level. You've got to think it's got to start drifting lower. I mean, euro is such a negative economic setup at the moment. But you know what? You can get into this trade. Okay, it sort of has broken through that support line, but has it got momentum? Has it got a fundamental driver? It doesn't have all these other characteristics. So if you are looking to trade and get short euro, to me it looks like it's a possibility, but I would be doing a very small trade size because it doesn't really fit into a cracking trade situation for my liking. Sterling, it's on its own path with Brexit. Boris Johnson coming out sort of saying, just really pushing that hard Brexit deal, and et cetera, et cetera. So to me, that doesn't really come into play. And dollar CAD, you can see how neutralised that is with the current geopolitical situation. Dollar yen slowly tweaking to the downside, but very unconvincing. And as you can see, Aussie and Kiwi just banging around those current levels, with Kiwi, the main currency, in the box seat today. All right, guys, that's a bit of a wrap from me. Not a hell of a lot in that, but you know what? I can't make stuff up if it's not there. All right, so that's all we've got to deal with. Have a good trade day. Cheerio.